Well, their property market is imploding, and it's a very complex web of financial interactions. Developers are in trouble, financiers are in trouble, and of course what I think worries for the government is that there's a lot of savings wrapped up in that market. So they're trying to really take some pressure off that property market and of course take some pressure off the broader economy.
That is Deutsche Bank economic advisor Warren Hogan commenting on the imploding Chinese property market. In his words, developers are in trouble, financiers are in trouble, and plenty of worries for the Chinese government. After the pandemic in 2019, it seems China is passing through yet another traumatic movement. And this time, in an unexpected sector, which is the real estate sector. Subsequently, after years of booming, astounding expansion and accumulating billions, China's real estate industry is suddenly retreating. Why this event seems to be a huge topic for economists in China and other countries as they are keeping a tight eye on the market right now is because China has a huge impact on the world, and also real estate has been one of the key drivers of the second largest economy in the world. Property accounted for over 70% of the nation's household wealth and 30 to 40% of bank loan books, while land sales generated 30 to 40% of local government revenue. And in China, there are 2 trillion yuan, $296 billion, in total mortgages at stalled Chinese developments, according to experts at GF Securities Co and Deutsche Bank AG. Many are asking questions about if this is truly happening and why this is happening. Welcome back to. This video will discuss the China real estate market and its sudden freefall of the century. Don't forget to please watch, like, and share this video if you enjoy it. Also, leave your comments and thoughts below, and don't forget to subscribe to the channel for more related content similar to this. Now, according to the China Real Estate Index and S&P Global Ratings, which is an American credit rating agency and a division of S&P Global that distributes financial research and analysis on stocks, bonds, and commodities, it is maintained that property sales declined by as much over 20 to 30% in China in recent times. This is huge compared to 2008, where there seems to be a similar case. As the housing bubble bursts and the debt crisis worsens, Chinese developers have already seen a catastrophe of at least $90 billion in equities and dollar bonds this year. Since 2022 began, the value of the builders' shares has decreased by nearly $55 billion. And many statistics are claiming that this figure might be more than we are seeing. What exactly is happening with China's real estate, and why is it falling drastically? Well, a lot has to be said about it. Who or what is the major contributor? The down yet interesting part of this story is that many Chinese residents are what most experts say to be the major contributors to this event. It has been recorded that fast increasing hundreds of thousands of disgruntled Chinese homebuyers have begun a mortgage boycott, whereby they are refusing to pay their mortgage. According to the researcher China Real Estate Information Corporation, as of now, mortgage payments have been halted on at least 200 projects in more than 80 locations. According to analysts at Jefferies Financial Group Incorporated, including Xujin Chen, the number is continually rising as new debtors emerge daily. The payment refusals highlight how the crisis enveloping China's real estate sector is now presenting a danger to social stability ahead of a Communist Party Congress later this year for hundreds of thousands of ordinary residents. And Chinese banks must now prepare for homebuyer defaults on top of the difficulties they are currently facing from the developer liquidity crisis. Statistics show that the postponed projects account for around 1% of the overall mortgage debt in China. And if every buyer fails to pay, there would be an increase in non-performing loans of 388 billion yuan, which would be approximately $58 billion US. You might be wondering, why would anyone want to buy a house and refuse to pay for it? Why are Chinese residents doing this? Before you blame the Chinese residents for refusing to pay their mortgage, you should understand that something might have triggered this action. We all know China to be one of the well-known communist countries where there's a limitation to freedom of speech and actions. And most importantly, where there is less acceptance of disagreement. Now, for this incident to have occurred, it shows to some extent that these residents must have been triggered to their threshold and shouldn't be blamed. A major cause of action is that prior to the crisis, developers only completed and delivered about 60% of the pre-sold homes between 2013 and 2020, even though the total amount of outstanding mortgage loans increased by 26.3 trillion yuan. That is a low turnout within 7 years, considering China has all the resources to make construction easier and quicker. Thus, low payment defaults due to China's pervasive practice of selling homes before they're built. That is, these residents pay money without seeing the houses. With the low turnout over the years, project payment enthusiasm has decreased due to the developers' worsening cash collection without a turnover. With the long wait, some Chinese homeowners couldn't wait any longer. Instead, they decided to take matters into their own hands. In several places, apartment owners who purchased their homes off-plan have chosen to simply relocate with their families into these under-construction towers, disobeying warnings to stay away. This contributes to the major reason why many Chinese live inside under-constructed homes across China. In the end, you don't blame them for this action, as most of these homeowners were paying through their sweats for homes they don't have yet. And this includes many who have lost their jobs due to the pandemic. Even those lucky to be among the 60% that got the supposed houses complain bitterly of how low and badly constructed those homes are, which differs totally from what they initially promised to have. You should also know that these residents had protested before most of them decided to quit payment. In fact, the last protest was in June when these homeowners were seen chanting, "Construction stops, mortgage stops. Deliver homes and get repaid." Ultimately, it's not as if these residents don't want to pay but are not getting what they want. Why does the world care about China's real estate market's collapse? Many might wonder, if China's real estate market collapses, how will it affect them since the housing issue is only occurring in China? We might not be present there, but countries with a business link and deals with China are and will feel the heat. This case is similar to when a global financial collapse occurred when the Lehman Brothers company warped. And since China's economy is the second largest in the world, there will surely be an impact. Moreover, the Chinese real estate market has been a major driver of China's economic development, so if it collapses, China may experience a recession relatively quickly. Take America, for example, where many companies are built and located in the United States yet have profound links with the Chinese economy. Major stocks at risk include Micron Technology, Apple Incorporated, Qorvo, the Boeing Company, Qualcomm, Advanced Micro Devices, and many more. Aside from affecting some American stock markets, China remains the global center for manufacturing, leading consumer electronics and auto production. If China experiences an economic downturn, this would only increase the high demand for these products from developing countries. Exports from other nations will be slower and more expensive. Thus, many large-cap corporations with a sizable amount of revenue exposure to China would be impacted if the economy experienced a substantial slowdown. What has been done by the Chinese government? Even though residential home construction is not the core job of the Chinese government, it's expected that in crises like this, they are to step for the complicated matters to calm down. For now, there seems to be a notable involvement of the local government and a few from the central. So far, the local government has gone as far as to reduce deposits, cash subsidies, and tax rebates for homebuyers, as well as relief money for developers. However, the local economy will suffer as a result of less land being purchased by real estate developers. Therefore, this comes at a price. Also, there is a report that the Chinese government issued a policy that mortgage holders can be offered a paid holiday without impacting their credit score. And recently, it was revealed that China issued $148 billion in loans to aid real estate developers. Upon all this development, many say that the government's involvement will yearn only for short-term results, not long-term ones, because China's real estate is indolent. Thus, after all the years of neglect, this will affect President Xi Jinping's anticipated unprecedented desire to run for a third term in office. To get more videos like this, please like, comment, and share our videos. Don't forget to turn on post notifications. Thanks for watching.